Hello guys and welcome to a new deep value video. Today we're going to deep dive into the financials of Cisco Systems, ticker symbol CSCO. Cisco is a company operating in the tech industry. This company is best known as a manufacturer and vendor of networking equipment. As of the 14th of August 2024, its stock price stands at $45 and it has a market cap of $182. Moving on to some key valuation metrics, the company's price to earnings ratio is 11.3, while its price to cash flow ratio is 13.9. Now let's take a closer look at the company's growth over the past 5 years. We can see that its revenue has grown by 9.8%, while its bottom line has increased by 8.5%. In terms of earnings per share, there has been a growth of 17.6%. However, it's important to note the change in the number of common shares outstanding, which stands at 4.075 billion, reflecting an 8.5% drop. Additionally, the interest coverage ratio is 21.2, suggesting the company's ability to meet its interest obligations comfortably. Next, let's move on to the balance sheet, starting with the quick ratio, which is calculated by dividing current assets minus inventory by current liabilities. We see that it stands at 0.81. This ratio helps us understand the company's short-term liquidity position. Looking at the long-term debt to equity ratio, we find it at 0.44 and the debt to equity ratio at 1.68. Now let's transition to the cash flow statement. Cash from operations is 19.9 billion, reflecting a change over the past 5 years of 25.7%. Meanwhile, cash from investing activities is minus 5.7 billion, showing a change of minus 134%. Furthermore, cash from investing activities is minus 11.6 billion and has changed by minus 58.4% over the same period. And lastly, we have free cash flow, which has grown by 37.3% during the same time from 14.95 billion to 19 billion and is projected to go to 16.9 billion in 2025. Moving forward, let's look at the return metrics to see how well the company is utilizing its resources. The ROE is 26.7%, which gives us an idea of the profitability relative to shareholders' equity. The ROI is 24.9 and the ROA is 11.4, both indicating how efficiently the company is generating returns from its investments and assets. Additionally, the return on invested capital stands at 8.8%, a crucial metric for understanding the effectiveness of the company's capital allocation. Finally, let's find the acceptable buy price. The first method is conducting a DCF analysis, by using a discount rate of 10%, a revenue growth rate of 3% for 10 years, and a perpetuity growth rate of 2%. We get a fair value of $46.5. Secondly, using a multiples valuation of 30 times trailing 12 months price to earnings, operating cash flow, and 25 times trailing 12 months free cash flow, we get a fair value of 66.6. Thirdly, the analyst aggregate price is 54.69. Putting it all together, we get an intrinsic value of $54.94. And using a 30% margin of safety to account for the high multiples I gave it, we get an acceptable buy price of $39.16, suggesting that the stock at the current levels is overvalued. To wrap up my analysis, I would rate Cisco as a hold. Personally, I consider investing in it only if its price dropped to sub 40 levels, based on the fact that it's a low single-digit growth story and can only be used as a value play with a big margin of safety. Thank you for watching. If you found this video helpful, please like and subscribe for more deep value analysis. See you in the next video. Bye.